You know, usually when we talk about real estate, there's this fundamental, basically universally accepted golden rule. You buy a house, you maintain it, and over time, well, its value goes up.
Right. It's the classic appreciating asset.
Exactly. But then you have the exceptions to the rule. Historically, if you mention mobile homes or, manufactured housing, people would immediately categorize them alongside cars or maybe boats.
Oh, absolutely. The assumption was always that the moment you buy one, the clock starts ticking and the value just depreciates.
Right, like driving a new car off the lot. But we're looking at a comprehensive guide today from a local real estate solutions company, Bradenton Sell House Fast Cash. And they detail how in places like Bradenton, Florida, that old rule is being completely shattered.
It really is. It's a massive shift in perception.
Yeah, and it's basically flipping traditional property laws on their head.
Yeah.
So our mission today for this deep dive is to figure out how this alternative market actually operates. Because treating a house like a parked car might actually be, well, the smartest real estate play you can make if you know the mechanics.
And it is a completely necessary shift in perspective, especially for anyone trying to navigate housing affordability right now. I mean, relying on outdated assumptions in real estate is a really quick way to lose money or just, miss opportunities entirely.
Which is why we're digging into this. Because I was going through the Bradenton data, and what struck me immediately wasn't just the sheer volume of transactions, it was who is actually buying these properties.
Right, the demographics are changing.
Radically. The old stereotype was always retirees migrating south for the winter. But that profile is fragmenting. Now, there is this huge influx of young professionals entering this specific market.
Because they're looking for cost-effective housing in an otherwise punishing economy.
Exactly. And alongside them, you have institutional and private investors moving in to diversify their portfolios. It's just wild.
Well, Bradenton serves as a perfect microcosm for this broader national trend, really. You have this convergence of geography and economics. I mean, the Gulf Coast proximity, the favorable climate, those naturally create a baseline demand.
Sure, everybody wants to live near the beach.
Right. But the reason young professionals and investors are aggressively competing for manufactured housing isn't just about the location or even, a slightly lower price point. It comes down to a fundamental evolution in the product itself.
Okay, let's unpack this a bit because it sounds like mobile homes have gone from being like the flip phones of real estate to modern smartphones. They are actually a highly viable segment now.
What's fascinating here is that the comparison to a smartphone is actually quite apt. We aren't talking about those utilitarian aluminum boxes from the 1970s anymore.
Right, the stereotypical trailer.
Exactly. When the building standards changed, specifically with the implementation of strict HUD codes, the Department of Housing and Urban Development, in the mid-90s, the structural integrity of these units improved dramatically.
So they're highly engineered now.
Highly engineered, energy efficient. We're talking about better insulation, advanced HVAC systems, and architectural designs that really mirror traditional site-built homes.
Wow. So they look and function like a standard house.
They do.
Yeah.
And because the quality of the asset improves so much, the depreciation curve flattened out. And in some high-demand markets, it even inverted into appreciation.
That is crazy.
It changes everything. If a structure is sound and built to modern standards, it simply behaves differently as a financial asset over, say, a 30-year timeline.
But here's where it gets really interesting for me. If these are functionally equivalent to traditional single-family homes now, you would assume the transaction process is identical, right? You find a house, you get a mortgage, you close.
You would assume that, yeah.
But that is where the illusion completely breaks. Because according to the guide, the legal status of a mobile home rests entirely on the dirt underneath it.
It is the single most important distinction in this entire sector. It literally dictates the entire life cycle of the asset.
So depending on who owns the dirt, the law views your house in two completely contradictory ways.
Yes. In the Florida, and honestly in most states, the classification of your property breaks down into real property versus personal property. If you own both the manufactured structure and the plot of land it sits on, the state classifies that as real property.
Which means you get to play by the normal real estate rules.
Exactly.
You can walk into a traditional bank, secure a standard 30-year mortgage, go through a conventional title transfer, and the closing process takes that typical, 30 to 45-day window.
Because the system treats it basically indistinguishably from a brick-and-mortar house in a standard subdivision. The ownership of the land anchors the structure to the traditional legal framework.
Right. But the guide makes it clear that the vast majority of the complexities in this market arise from the second category.
Oh, absolutely. If you reside in a mobile home park where you lease the lot, meaning you outright own the physical structure, but you pay monthly rent to a park owner for the dirt it sits on, the house is legally considered personal property.
Personal property.
Yes.
Yeah.
The legal term is chattel.
Wait. So if I buy a house, a place where I sleep, cook, raise a family, but I only lease the land, the state views that transaction more like I am buying a stationary car than a piece of real estate.
Functionally, yes,
That is wild.
it's chattel. So it falls under completely different legal and tax frameworks. You aren't getting a traditional mortgage for personal property because, well, a traditional mortgage requires a deed to land as collateral.
Right, because you don't own the land.
Exactly. Instead, you have to seek out specialized chattel financing. And the implications there are massive. Chattel loans typically carry higher interest rates and much shorter repayment terms than conventional mortgages.
Because the lender is taking on more risk, right, since the asset isn't permanently tied to the land.
Spot on.
Well, that totally explains the massive difference in transaction speed outlined in the documentation. A standard real estate closing takes over a month because of all the underwriting. But a personal property transaction on a leased lot can close in just a few days,
Sometimes even faster.
which completely bypasses standard underwriting. How are buyers and sellers getting away with a 3-day turnaround without taking on massive legal risk?
Because the mechanics of the transfer are just entirely different. When you buy real property, a significant portion of that 30-day closing window is spent conducting deep title searches.
Right, making sure there are no liens on the land.
Exactly, and waiting on the bank's rigorous property appraisals. But with personal property, you're essentially transferring the title of a physical asset, very much like signing over the title to a car at the DMV.
Oh, wow. So if a buyer is using cash or already has pre-approved specialized chattel financing, there is no real estate title search required for the dirt.
Because they aren't buying the dirt. The friction of the transaction is drastically reduced.
So that lower friction, combined with the lower initial purchase price of the structure, makes the entry point highly acceptable for people.
Extremely accessible.
But knowing that legal standing is totally crucial, because treating personal property like real property will get a buyer in serious trouble. I mean, you aren't just dealing with standard homeownership problems like a leaky roof. You're dealing with a totally unique set of vulnerabilities.
Starting with Mother Nature.
Yeah, the weather. Living in Manatee County means the weather is basically an unavoidable stakeholder in your investment.
Gulf Coast storms dictate the insurance markets and property valuations entirely.
The guidelines in the source material are very specific about this. Property value in Bradenton is heavily tied to weather resilience. We're talking about those HUD wind zone standards again.
Right. HUD divides the country into different wind zones, and Florida requires homes to meet the most stringent standards, typically wind zone 2 or 3.
Which means a house has to be physically capable of surviving a hurricane.
Exactly. The construction must withstand winds upwards of 110 miles per hour. But having a home built to that standard is really only half the equation. The mechanics of securing the home to the ground are just as critical.
The tie-downs.
Yes. Property owners have to maintain specialized tie-downs. These are heavy-duty steel straps and anchors that physically bind the chassis of the mobile home to the earth.
And if you neglect those tie-downs or fail to reinforce the roofing, your property value just plummets.
Oh, immediately. Buyers and their specialized lenders are highly aware of those risks, and an inspector will flag a compromised tie-down system right away.
But a hurricane isn't the only external force threatening these homeowners. There is a totally different type of pressure that comes from living in a leased lot community, and it stems entirely from park bureaucracy.
This is where that legal classification as personal property creates a really significant structural vulnerability for the homeowner.
How so?
Well, think about it. When you own a traditional house and the land, your primary financial risk is falling behind on your mortgage or your property taxes. That triggers a pre-foreclosure process.
Right, which is a lengthy, heavily regulated legal process. It's designed to give the homeowner time to cure the debt or sell the property before the bank takes it. It can take months, sometimes over a year.
Exactly. But in a managed park, the timeline is brutal. The park management has the unilateral authority to raise the monthly lot rent fees.
So you own the house, but if they double the rent for the dirt underneath it, you are entirely captive to that decision.
You are. I mean, you can't exactly hook a modern double-wide manufactured home up to a pickup truck and drive away.
Right. It costs thousands of dollars to move one, assuming the structure can even survive the stress of the relocation.
Which is why the term captive audience is highly relevant here. The historical stability of those monthly lot rent fees is something sophisticated buyers scrutinize very closely.
Because if management aggressively raises those fees, residents on fixed incomes find their household budgets just destroyed.
And if you fall behind on those lease payments for the dirt, you aren't afforded a lengthy pre-foreclosure process. The park management simply initiates an eviction.
You can be evicted from the land, leaving you with a house you legally own but have no legal right to keep in its current location.
It is a terrifying mechanic.
It really is. And that power imbalance bleeds directly into the sales process, too. The Bradenton Guide details park approval as the ultimate hurdle when you try to sell.
It is a layer of gatekeeping that simply does not exist in standard property transactions.
Right, because in traditional real estate, if you find a buyer willing to meet your price, you close the deal. The neighborhood association might have rules about what color you can paint your front door, but they cannot stop the sale.
But in a leased lot community, finding a buyer is only the first step. That prospective buyer must then submit to the park management's background, income, and credit checks.
So what does this all mean? You could have a cash buyer ready to go, but the park management can just act like a strict bouncer at a club and veto your entire sale.
The sale completely collapses. You're back to square one, regardless of how much cash the buyer was ready to hand you.
That is so frustrating.
Now, park managers will argue this strict vetting protects the integrity of the community, ensuring only financially stable residents move in.
Sure, from their perspective.
But it also creates an undeniable power dynamic. A strict park manager can inadvertently, or perhaps intentionally, make it incredibly difficult for a resident to sell their home on the open market.
And this raises an important question about trade-offs, right? The documentation actually provides a really good comparison chart across property types. If you look at the maintenance burden of a traditional single-family home, it is massive. You manage the interior, exterior, the landscaping, the driveway.
It's a lot of work.
But for a manufactured home on a leased lot, the maintenance burden is moderate. You only maintain the structure. The park handles the roads, the community pool, the landscaping. You get the amenities without mowing the lawn.
Which is an incredibly attractive proposition for many people, especially young professionals wanting a lower maintenance lifestyle or older adults looking to downsize. But yielding that enormous power to park management is basically the cost of admission. They control the lot rent, the rules of the community, and ultimately the liquidity of your asset.
Which brings up a critical logistical problem. With gatekeeping park managers, complex legal categories like chattel, and the constant threat of lot rent increases, how do sellers actually get out of these properties?
Especially if they find themselves in a distressed situation.
Right. Say you are facing an impending eviction from the lot, or you inherit a property you have no intention of living in. The data points out that the traditional real estate playbook completely falls apart here.
It falls apart because the traditional system is designed for real property, not personal property. The friction points are just entirely different. A standard real estate agent often lacks the niche experience required to navigate park bureaucracies.
Because they're accustomed to marketing land and structure together.
Exactly.
I was looking at the traditional listing process, and applying it to a leased lot mobile home seems like a complete logistical nightmare. A standard listing requires you to invest capital upfront, staging the property, fixing the tie-downs, updating the plumbing, replacing the roof, all to attract a retail buyer.
And even if you attract that retail buyer, the waiting game begins. You are waiting for them to secure that specialized chattel financing, which, by the way, is notorious for falling through at the last minute if the lender decides the park's ground lease terms are too restrictive.
Oh, wow. I didn't even think about that.
Yeah. And you are waiting on the park manager to conduct their background checks. And all the while, as the seller, you are bleeding capital because you are still responsible for paying that monthly lot, rent, insurance, and utilities.
This friction is exactly why direct cash sales have become such a prominent exit strategy in markets like Bradenton. Companies that specialize in mobile home solutions basically bypass the traditional listing delays entirely. They evaluate the property and purchase it as is.
That as-is mechanism is incredibly significant, particularly for specific types of distressed sellers. Take the probate process, for example.
Okay.
Probate is the legal procedure of transferring an inherited asset after someone passes away. It is notoriously slow, often taking several months,
And during those months, the clock is ticking on the lot rent. If you inherit a mobile home in Bradenton, but you live in, say, Ohio, you probably don't have park approval to live there, but the park still expects their monthly check.
Exactly. If the heirs fail to pay that lot rent while the estate is tied up in court, the park can initiate eviction proceedings before the heirs even legally own the home to sell it.
That is a nightmare scenario.
It is. In that scenario, trying to coordinate repairs, stage the home, and hire a traditional agent from several states away is just unmanageable. A direct cash buyer absorbs that friction. They understand the local park bureaucracies, they don't rely on fragile chattel financing, and they close the transaction in days rather than months.
Usually you'd think selling direct to a cash buyer means taking a major hit on the property's value. You assume you're trading top dollar for the convenience of a fast exit. But in this specific market, where a buyer's financing can fall through or a park manager can kill a deal at the 11th hour, a traditional listing sounds like it might actually be far more expensive in terms of holding costs and pure frustration.
Well, it requires a redefinition of what constitutes a successful transaction. Maximizing value in the leased lot mobile home market isn't just about the final selling price printed on a contract.
It's about mitigating holding costs.
Yes, it involves evaluating the structural integrity of the home, those wind zones and tie downs we discussed, understanding the specific fee history of the park environment, and calculating the risk of a deal collapsing.
So it's about certainty.
Exactly. For a seller facing financial strain or a really tight timeline, securing a seamless transfer of ownership without the risk of financing contingencies is a calculated financial maneuver. It's not just a shortcut.
It fundamentally comes down to knowing exactly what you hold in your hands. Are you holding real property tethered to the earth, or are you holding personal property sitting on rented dirt? Because the mechanics of buying, maintaining, and eventually selling change entirely depending on your answer.
It demands an incredibly high level of situational awareness. You simply cannot apply single-family housing logic to a chattel market. Preparing your documentation properly, understanding the motives of park management, and recognizing the limitations of specialized financing. Those are the non-negotiable foundations of a successful transaction in this space.
What the Bradenton Guide reveals is that manufactured housing is no longer just a depreciating afterthought. It has evolved into a highly complex, fast-moving asset class governed by its own very specific mechanics. Understanding these systems, the difference between real and personal property, the leverage held by park owners, the structural necessity of HUD codes, makes you a much sharper observer of the broader housing market.
Absolutely.
It proves that sometimes the most crucial element of a house isn't the upgraded kitchen or the reinforced roof. Sometimes the most important part of a house isn't the walls, but the lease on the dirt beneath it.
Which leaves us with a rather profound economic reality to consider moving forward. Well, we have established that the value, the liquidity, and the very stability of a leased lot mobile home is almost entirely dependent on the park management's fees and their approval processes.
Right, they hold all the cards.
But if we look at the trajectory of real estate in these highly desirable land-constrained Gulf Coast areas, a structural conflict is brewing.
What do you mean?
Think about it. What happens to all those captive homeowners when the dirt underneath these highly desirable parks becomes so overwhelmingly valuable that the park owners decide the most profitable move isn't collecting lot rent, but simply selling the land itself to commercial developers?